The following content is an update and technical analysis on Bitcoin, the largest component to the cryptocurrency markets here off the daily interval. And in the first video of episode 9 on the Bitcoin playlist, I had emphasized an intricate trade analysis pertaining here to Bitcoin, where we found ourselves in a rather delicate predicament. It had been an extended duration since episode 9, where I had come across an opportunity for an objective entry into a short position, taking advantage of the impeccably formed head and shoulder bearish continuation pattern right amongst this key inflection point, where we had a juncture where it became crucial to monitor the crypto markets very closely here. And again, my 90% of the vast majority of my trades are short to the downside, and specifically waiting for this nice clean breakthrough below this critical level. And such a breakthrough in my previous video would serve, as I had mentioned, as a resounding sell signal, indicating the initiation of a potentially significant downward movement. And this is long before Binance and a lot of the cryptocurrency fundamental catalyst rocked the crypto markets here. Whereas I highlighted key levels that demanded our utmost attention during the intricate trading scenario here. And really what had happened is we broke down. We ended up issuing that sell signal, ended up getting that sell signal. We ended up backtesting it right to the bottom of that primary reactionary low neckline of this head and shoulder. We ended up consolidating further here. Again, backtested once again, coinciding with the 50-day moving average, hovering up above, which coincided with my strong, what I would consider a pretty major resistance at the 28,628.20 price resistance. Again, within through a confluence of the, call it a triple line of resistance off that primary reactionary high down trend line for a great objective entry short on a great risk reward ratio. And in my previous video, we ended up selling off through that Binance catalyst. Ended up having a strong rally, counter trend snapback rally, where I had again reached out as a critical juncture and a critical moment for the cryptocurrency markets, fueling and scaling in right back into this triple key line of resistance for an additional objective entry short, if not an add-on to your short swing position, down to the 25,208 price support. I know it's blinding here, down to that first target. That was the first initial swing short trade position target, and watch for a potential bounce if and when we got there, for a potential nice clean day trade for any active and or day traders. And here's the update. We ended up sort of smashing slightly down below it, end up having that snapback whipsaw reaction right back into it. And again, if you're an active and or day trader, you'll zoom in here on the 30 minute interval, whereas we ended up backtesting right amongst it once again. We ended up breaking solidly right below that, just the velocity of that move to the downside once breaking the 25,208 price support there. Ended up backtesting it once again, especially for any active and or day traders, gaining these quick ins and outs here, consolidated further. And then once again, we ended up breaking here off the 30-minute interval, the 30-minute 50 moving average, put it in that nice clean breakout right back above, and whipsawed right back above the 25,208 price resistance, and which was good for 2% gains in a single day there, just taking off about 527 points to the upside. And again, if you're a quick short trader, watch these key levels, copy my charts. That was good for a quick 1.4% scalp to the downside as well. So we'll see what happens. Again, I will continue to update you if I see any more significance here in the cryptocurrency markets. But that is a nice clean bounce. I've added this 24,757.70 price support, which correlates strongly with the weekly interval there. And bull traders, dip buyers, they want to say, again, this is not just for a short. These videos are not pertaining to just short traders. They're also pertaining to long-term dollar cost average zones, where you'll have a initial reaction where you're trying to bring down the dollar cost average in all of your, if you're a strong long-term believer and investor in cryptocurrency and through Bitcoin, these are your long-term averages to really level down towards if and when we even get down here, back down in here. I've added this new primary reactionary low trend line of the December 2022 lows here, and I believe it has a validation now. What we do have is a complete, definitely some damaging momentum indicators here in the daily interval, where the oscillator and moving average convergences have completely snapped their zero line thresholds. So we are in a damaging confliction here amongst the technical momentum indicators. So again, anything's possible. But bull traders, dip buyers, they stepped in right here, right amongst that mark there. I've added this new key, primary reactionary low, benefit of the downtrend line. I've always had this key concealed, primary concealed hidden trend line that I think has a great level of significance if and when we break it. Bull trader, bear traders, short traders, they want to say solid daily candle close below that, issuing a secondary sell signal, in my opinion, for a very strong move to the downside, which at the same time, within the confluence of a dual resistance with the 200-day moving average hovering down below, that would be a pretty big, strong, pretty sizable move to the downside. I could only imagine a ton of stops, forced liquidation, margin calls to go off if and when we snap that level. As far as the upside, bull traders, long traders, they want to defend these key levels really at all cost. If we snap that key primary low trend line there, they need to defend this trend line really, again, at all cost. I think that is the fourth in inches moment for bull traders and their long traders, and they need to they want to have a complete retracement to the upside, whereas you have the 50-day moving average hovering up above with this primary reactionary high downtrend line off the mid-April highs there, and they want to snap that. Bull traders, long-term investors, they want to snap that key level on a key breakout, potentially even backtest it, defend that key primary reactionary downtrend line, and smash on a big break move to the upside, taking out the 628 price resistance, which has been heavily validated in months on end now throughout the entire year, though. And taking out that primary reactionary high downtrend line with the 50-day moving average will spur health right back into these technical momentum indicators for a move to the upside. And I want to zoom you out, take you out to the much larger picture, which defines and will dictate more than likely where the next move goes here, and that is the weekly interval. I've added, this is going way back on some of the longer term charts that I've covered in my playlist, and there has been reactions really among the primary reactionary high downtrend line, uptrend line, off the 2015 reactionary lows there, cuts right through the COVID crash, cuts right through the strongest rate hike in through Powell in history. And again, we snapped it and we ended up backtesting it. We ended up shorting Bitcoin quite a few times throughout this inflection points off the nice clean divergent high with the rising bearish wedge pattern. We ended up shorting right at the top of that inflection point. And again, just big moves to the downside. That's why I love trading Bitcoin. The huge amount of juice that gets shot in each direction there. And I've added this new key, primary reactionary high, low trend line off the 2017 reactionary lows. Again, cuts right through the COVID crash, cuts right through the bottom of that 2022 fastest rate hike in history crash. And it's been validated where you had multiple back tests for an entire few months of sessions on end, and that marked the bottom there. So here we are. This is the 2470, 5770 price support that I had mentioned in that daily interval there, and that is pretty strong support there. That is where bull traders, dip buyers, they want to defend that level really at all costs there. Once we if and when we take that out, you're going to have the 50 weekly moving average hovering down below that key inflection point off that primary uptrend line. And if that goes, that's going to spell pretty bad news there in a potential prolonged move right back down to the 18,332 price support, called the 236 fibs retracement. And that is the mother of all inflection points in my eyes. That will spell a crypto winter bear market if and when broken. So again, bull traders, dip buyers, they want to defend that key inflection point, these key levels at all costs, dollar cost average down in, and then ultimately, if they get right back down there, you don't want to see that. If you crack this primary uptrend line, I believe it'll put in a potential weekly interval sell signal in this dimension, and a potential move back down there, which will be the neckline off this head and shoulder looking top here. And that will spell pretty bad news for the cryptocurrency markets. If we take that level out, I would only suspect the neckline would increase the odds for that neckline to be snapped, because you already have hidden and concealed negative and bearish divergences that are constructed amongst all three technical momentum indicators here. And it is a rarity to see any of this online here. That is a bearish hidden divergence, confirmed crossovers there on the moving average convergence. And again, the zero line thresholds here on the weekly cannot get damaged. The bull traders, dip buyers, they need to defend this level really at all cost, and especially the fake out move. If we break that level, that is the mother of all levels right now in the near term. That is the big level that needs to be defended really at all cost, in my opinion. So we'll see what happens. I'll keep you updated if I see any more significance here in the charts. And the entire trade thus far was good for call it a 13% crash there.